This is a market update for the end of the week, Friday, the April 17th. Now, by most accounts, this week would be considered a pretty wild week in a regular market, but compared to what we've just been through over the last 4 to 5 weeks, this was kind of a calmer week. The Dow Jones ripped up this afternoon and finished off the day up 700 points, 3%, now reaching a level of 24,000 points. Remember, it wasn't too long ago we were below 20,000 points, and it wasn't too long ago we were actually at 30,000 points. So this has been a wild ride for traders. You must be loving this, especially if you're on the right side of the trade. The U.S. announced plans to reopen the economy. So of course, Donald Trump hit the news today with that announcement. Somewhat of a symbolic announcement, as the decision to open the economy is really dealt with on a state-by-state basis in the U.S. Within our dividend basket that we've been strongly pounding the table on, one of our top positions being Royal Bank of Canada, closed up today 4.5%. The dividend yield of Royal Bank has now gone below 5% for the first time in many weeks. We still see value at this level, and we've seen all the bank stocks go up today. In fact, all the companies in our dividend strategy have gone up this week and today. And one of our other favorites, of course, is Disney. Disney shares have gone up by another 4.6%. I saw the news recently that they've had over 50 million new subscribers join Disney Plus in the last couple of weeks. So if you haven't tried Disney Plus and you have young kids like me, I strongly recommend it. It's a great way to keep them quiet for at least a half an hour. Oil has really been taking it on the chin. The WTI price is at just over $18 a barrel. So you can see this massive discrepancy still between what oil is trading for in Western Canada versus other parts of the world. So the question comes down to, have we already seen the bottom? My view is probably we have, as far as the equity markets are concerned, but as far as the economy is concerned and the future, I think things are still very, very grim. I want to leave with you a moment just to think about what's going to happen in the coming weeks. We've seen most governments around the world and North America say that we're into this lockdown, social distancing, self-isolation, whatever you want to call it, theme for at least another couple of weeks. We have seen companies who are basically shuttering their businesses, many of which I believe are not going to be able to reopen, or they may only be open for a short-lived period before it becomes very obvious to those owners that business is going to be closing for good. Now, I'm not trying to be a pessimist, but I am being a realist. And so I think it's important, again, I've been delivering this message before, take a look at your own financial position. Make sure you cut on your spending. Make sure you shore up your balance sheet, and make sure your investment portfolio is appropriate for your risk needs. If you are a low-risk investor and you have a high-torque portfolio full of high-growth equities, you need to really rethink what you're doing with that portfolio. And equally, if you're sitting on a lot of cash, this might be the time that you start getting some of that cash deployed, as we're seeing a lot of fund managers out there, equity fund managers, starting to do the same with their cash levels. We'll have more of an update for you next week. Have a nice weekend. Stay safe and stay healthy. Thank you.